What is a target date fund? What if I told you there's one investment that could handle your entire retirement strategy automatically, rebalancing itself as you age without you having to think about it? That's exactly what target date funds do, and by the end of this video, you'll know if they're right for you. Introduction. Hey everyone. Today we're diving into one of the most popular investment options in 401k plans, target date funds. Whether you're just starting your career or planning for retirement, understanding these funds could save you thousands of dollars and countless hours of investment research. What is a target date fund? So, what exactly is a target date fund? Think of it as an investment on autopilot. A target date fund is a mutual fund that automatically adjusts its investment mix based on when you plan to retire. Here's how it works. You pick a fund with a date close to when you expect to retire. For example, if you're 25 years old and plan to retire at 65, you might choose a target date 2065 fund. The fund managers then handle everything else. They invest your money in a mix of stocks and bonds that becomes more conservative as you get closer to retirement. It's like having a personal investment advisor who gradually shifts your portfolio from aggressive growth when you're young to safer, income-focused investments as you approach retirement. The glide path concept. The magic behind target date funds is something called a glide path. Picture an airplane coming in for landing. It starts high and fast, then gradually descends to a smooth, safe landing. That's exactly how target date funds work with your investments. When you're young, say 40 years from retirement, the fund might be 90% stocks and 10% bonds. This aggressive allocation makes sense because you have decades to recover from market downturns, and stocks historically provide the best long-term growth. As you get closer to retirement, the fund automatically shifts to a more conservative mix. By the time you're ready to retire, you might be looking at 60% stocks and 40% bonds. After retirement, it continues adjusting to prioritize income and capital preservation. The beauty is that this happens automatically. You don't need to remember to rebalance or worry about adjusting your allocation. The fund does it for you. Advantages of target date funds. Target date funds offer several compelling advantages. Simplicity is the biggest draw. You literally set it and forget it. No need to research individual stocks, monitor market trends, or stress about when to rebalance. It's perfect for busy professionals who want to invest wisely without becoming investment experts. Automatic diversification means your money is spread across thousands of stocks and bonds globally. Most target date funds invest in other mutual funds, giving you instant exposure to domestic stocks, international stocks, and various bond markets. Professional management puts experienced fund managers in charge of your portfolio. They handle the research, allocation decisions, and rebalancing, leveraging resources and expertise that individual investors typically can't access. Dollar cost averaging happens naturally when you contribute regularly to your 401k. You're buying more shares when prices are low and fewer when prices are high, which can smooth out market volatility over time. Potential drawbacks. However, target date funds aren't perfect for everyone. One-size-fits-all approach means the fund doesn't know your specific situation. Maybe you're more risk-tolerant than average, or perhaps you have other investments that should influence your 401k allocation. The fund can't account for your complete financial picture. Higher fees can eat into returns. While target date funds have become more affordable, they typically cost more than simple index funds because you're paying for active management and the underlying fund's expenses. Limited customization means you can't adjust the glide path or allocation if your circumstances change. If you want to be more aggressive or conservative than the fund's target allocation, you're out of luck. Overlap issues can occur if you invest in multiple target date funds or combine them with other investments that hold similar assets. You should consider target date funds. Target date funds work best for specific types of investors. Beginning investors, who feel overwhelmed by investment choices, benefit enormously from the simplicity. If you're contributing to your first 401k and don't know where to start, a target date fund removes the paralysis of choice. Hands-off investors who prefer to focus on their careers rather than manage portfolios find target date funds ideal. You can contribute regularly and trust that your allocation will adjust appropriately over time. Employees with limited 401k options often find target date funds among the best choices in their plan. Many employers offer high quality, low cost target date funds as their default option. However, if you're an experienced investor who enjoys researching investments, wants maximum control over your portfolio, or has complex financial situations involving multiple accounts, you might prefer building your own portfolio using individual index funds. Choosing the right target date fund. If you decide a target date fund is right for you, here's how to choose. Pick the right date by selecting a fund that matches your expected retirement year. Don't overthink this. If you're not sure, round to the nearest 5-year increment. Compare expense ratios because fees matter enormously over decades of investing. Look for funds with expense ratios below 0.20% and definitely avoid anything above 0.50%. Review the underlying investments to understand what you're buying. Most target date funds invest in broad market index funds, but some use actively managed funds or alternative investments. Check the glide path to ensure it matches your risk tolerance. Some funds are more aggressive than others, even with the same target date. Final thoughts. Target date funds aren't the perfect solution for everyone, but they're an excellent choice for many investors. They solve the biggest challenges most people face with retirement investing: getting started, staying diversified, and adjusting risk over time. Remember, the best investment strategy is one you'll actually stick with. If a target date fund helps you invest consistently for retirement, it's probably the right choice, even if it's not theoretically optimal. What's your experience with target date funds? Are you using one in your 401k, or do you prefer managing your own portfolio? Let me know in the comments below. And don't forget to subscribe for more practical investing advice. See you in the next video.